Stock market action, positive global cues and a late rally in financial stocks helped boost sentiment. Sensex gained nearly 500 points and the Nifty gained over 100 points. Nifty Bank Index gained nearly 2%. Prashant Nair is in fact here to join us with a quick market wrap. Prashant.
Well, the market did just fine. Actually it did very well given the fact that on Friday out of Wall Street, what came out was deep red, 2 and 3% cuts on the S&P 500 and the Nasdaq. But here, the market, after the first 2 hours of volatility, picked a trend, and the trend was on the upside. It kept going, ending above 17,300 on the Nifty finally. Financials, as we've been pointing out, are the strongest part. Earnings are tying in nicely. So private bank index, the PSU bank index, the PSU bank index was up almost 4%, and the bank Nifty too. SBI, ICICI Bank, Axis Bank, IndusInd Bank, Bajaj Finserv, I can go on. That's the part of the market on the Nifty which did very well. NTPC, Bajaj and Reliance Industries were the other stocks which participated, not banks, not financials. Metals started lower. They were under pressure through the course of the day. Hindalco, JSW Steel, Tata Steel are some of the other losers. Well, market breadth came off quite a bit, and there were more losers than stocks which were gaining by close, but not by that much. In any case, Tata Elxsi was a big loser on the back of earnings. It's the first miss for the company in 2 years. Oberoi Realty started lower, ended lower. Garden Reach, which has been a huge outperformer, gave up gains. Navin Fluorine, Delivery, Credit Access, Heidelberg, of course, reacting to numbers which came in the second half of the day. But there were gainers as well. Adani Green was up 4-5%. Canara Bank was up in the PSU bank space. IRB was up 10%. Deepak Fertilizer, Data Patterns, Metro Brands are some of the names on the upside in the broader space. Pretty vibrant session. I think the first stop, of course, for the market is going to be to hold the 17,300 level for the index, and then you get to 17,400, 17,421, which is an important retracement level of the September fall. I think in this context, the global remains important. It's just that on days when US market falls aggressively, we fall less. And when the US market rises, we sometimes participate in full, sometimes actually do even better. So that relative element of outperformance still very much here. Back to you.
Right, Prashant, thanks a lot for that. On to the currency markets now. Rupee shook off early weakness to end flat in what was a cautious start to the week. The RBI was reported to have intervened last week to avert more depreciation. As things stand, $1 is worth more than 82 rupees. Well, here's a CNBC-TV18 exclusive. Air India's new CEO and MD Campbell Wilson is charting a new flight path for revival and says Tatas are committed to making it the best airline in the world. Speaking to Shireen Bhan in his first TV interview, Wilson said that the turnaround process is not a T20 but a test match which needs patience, ambition and luck. When asked about the progress so far, Wilson said Air India's punctuality has increased with on-time performance jumping from the 6th spot in April to the 1st spot in September. He also talked about the plan to triple Air India's fleet and gain 30% market share in 5 years. Speaking about the negotiations with Singapore Airlines for a possible integration with Vistara, Wilson said that the talks are at an exploratory stage and Air India's revival is not contingent on the potential integration.
Well, there's a lot we can do. Many contracts have been renegotiated. We have aircraft that previously were being paid for but not able to fly. We're putting them progressively back into service. New systems and tools, revenue management systems, distribution capabilities. As we get more punctual and therefore more reliable, we can charge people a fare that is commensurate with the product quality they're getting. But there's many other things we need to do. Seats, in-flight entertainment, all of these things we're investing in to take that product a little bit further. But yes, it is still a challenged business, and the high fuel prices at the moment are not helping any airline, including Air India. But we're confident that there is a path to success. We're confident the path to success is not forever. And so, yes, I think we're quietly optimistic that we can turn this business around in a pretty good time.
What kind of capital infusion is required at this point in time for you to be able to achieve the kind of targets that you've set out for Air India?
Well, we're not talking specifically numbers at the moment. We're talking about ambitions. We've publicly stated that we want to increase the fleet by about 3 times. We want to invest in products and systems and services that the customer experiences, but also that the employees need in order to provide the service we want to provide. It's going to require significant investment in aircraft, but not just aircraft. Really, so it's more about ambition rather than dollars at the moment, provided that we execute well and we are delivering the value and meeting the aspirations of our shareholder. I'm quite confident the capital will come.
But what would the ballpark number be, given the fleet expansion aspirations that you have, as well as everything else that you want to fix on the back end? And where is the capital going to come in from? Are you looking for capital outside of the promoters?
Well, again, I'm not going to put a number to the capital. I think you can do some back-of-the-envelope calculations. If you triple the fleet and multiply that by aircraft prices, you get a sense.
It would depend on who you're talking to and how hard of a bargain you're going to negotiate.
And trust me, we're negotiating a very hard bargain. But it's big numbers. But it's big numbers in the context of rebuilding an airline, a world-class airline, an airline with a global reach that represents and takes India to the world. So the numbers are big, but the ambition is big, and I think we've got the backing and the support to do it. With respect to how long it takes, look, it's going to take a while. This is going to be it's not a T20, this is a test match. And in a test match, you have different milestones. In the way to 100, you need to be patient, you need to be ambitious, you need to be sometimes a little bit lucky. Sometimes you'll score sixes, but mostly it's about graft application, patience, and scoring those ones and twos consistently over time to reach the objective.
Well, you can catch excerpts of this exclusive conversation at 5:30 p.m. right here on CNBC-TV18. Well, Reliance Jio and Ericsson have entered into a long-term strategic agreement to build 5G standalone infrastructure. This marks the first such tie-up between the two companies for radio access network deployment. Nokia, too, has secured a multi-year contract with Jio to supply radio access network equipment. Now, keep in mind that these Scandinavian-based companies are the ones which have backed these contracts. Both these companies have called it a strategic agreement, a long-term agreement between the two sides, Jio as well as Ericsson and Nokia. As far as Ericsson is concerned, the scope of operation is slightly larger. They're looking at 5G RAN products, radio system solutions, as well as E-band microwave mobile transport solutions. That's the scope of operations as far as Ericsson is concerned. Nokia, on the other hand, is looking largely at 5G radio access network RAN equipment, essentially. The RAN products could be varied, like base stations, high-capacity 5G, massive antennas, radio, remote radio heads. So this is broadly the broad scope of operation of both these contracts. The reason it's significant is that Jio enjoys one of the largest RAN footprints in the world, and that makes it that much more significant in terms of 5G deployment, not just for Jio, but also for some of these vendors and telecom equipment manufacturers such as Ericsson and Nokia. So a big announcement there coming in from both these companies. And of course, moving forward, important to point out here, standard disclaimer will be on your screens. Reliance Industries, the promoter of Reliance Jio, also controls Network 18, which in turn owns CNBC-TV18. Well, meanwhile, renewable power producers have been urging the government to end reverse bidding for wind and solar power projects. Power Minister R.K. Singh has told CNBC-TV18 that the government is examining their proposal. In reverse bidding, once the lowest bid is found after the bids are opened, there are further auctions for even lower bids. Though it helps discover lower prices, industry players say it is hurting their business.
We are examining proposals regarding ending reverse bidding in wind. But let us examine it. Yeah.
And sir, is the government going to relax mandatory sourcing of solar modules from approved list of domestic manufacturers?
Whatever decisions we are going to take, I will not tell you. When I take it, I will tell you.
EdTech company Byju's has raised $250 million, or about 2,000 crore rupees, from existing investors. This latest round of fundraising comes just days after the company announced about 2,500 layoffs, which amounts to about 5% of its total workforce. Existing investors include the likes of Qatar Investment Authority. They have participated in this latest round of fundraising, which values Byju's at $22 billion. The company recently reported a loss of nearly 4,600 crore rupees for FY21. most reported by an Indian startup so far. Money Control reports that existing investors of Byju's offer to invest at a valuation of $12 billion after the earnings were released, but Byju's refused to do so and has now raised funds at a valuation of $22 billion. Well, here's the big international story, a case for military modernization and expansion, doubling down on the stringent zero-COVID policy and a call for the rejuvenation of the Chinese nation. President Xi Jinping's two-hour speech on the opening day of the China Communist Party Congress cast himself as the unilateral power center ahead of an unprecedented third term and cemented his position as the nation's most powerful leader since Mao Zedong. Apart from taking a dig at the U.S. Citing foreign interference in Taiwan and justifying the security law that effectively criminalized dissent in Hong Kong, Jinping also laid out the key growth drivers for the world's second largest economy: innovation, high-quality education, and self-reliance in science and technology. President Xi also vowed to speed up efforts to build the PLA into a world-class military. He did not, however, make any reference to India in his speech.
We insisted on putting the people and their lives above all else and tenaciously pursued a dynamic zero-COVID policy. We launched an all-out people's war to fight against the pandemic and protected the people's health and safety to the greatest extent possible. We made tremendous achievements in striking a balance between epidemic response and economic and social development. Resolving the Taiwan question is the matter for the Chinese, a matter that must be resolved by us. We will continue to strive for a peaceful reunification with the greatest sincerity and the utmost effort. But we will never promise to renounce the use of force, and we reserve the option of taking all necessary measures.
In fact, President Xi said that making China great again is his central task over these next 5 years and likely beyond. In a 2-hour-long speech opening the Congress on Sunday, President Xi said that China's national rejuvenation will be underpinned by a Chinese-style modernization, and that modernization would prioritize and continue to prioritize national security. So to President Xi, that means self-reliance, tech supremacy, and a military power that is, quote, normalized. Now, Xi also suggested that growth was going to take a back seat. The guiding principles for the economy, by and large, are common prosperity. So this is narrowing the income gap with a phrase that he used, which got a lot of attention here: regulation mechanism of wealth accumulation. Also high-quality development, which a lot of people pointed to as green investment and development. The continuation of zero COVID, he said, which he said that this policy has achieved major positive results and protects lives and the economy. And he said that, of course, despite a lot of criticism outside of the government about the lockdowns and mass testing affecting China's economic growth.
Well, staying with international action, the Biden administration has imposed far-reaching export restrictions on the semiconductor industry, and they are clearly aimed at curtailing China's ability to manufacture chips and use them for making supercomputers for military purposes. Now, the Chinese chip industry has reacted sharply, and the impact of the restrictions are being felt by leading manufacturers across the globe. Parikshit Luthra is joining us with more. Parikshit.
That's right. We have been seeing how United States has imposed export controls to restrict China's ability to make high-end semiconductors. These restrictions by U.S. Department of Commerce are aimed at Chinese manufacturing of advanced computing chips, supercomputers, and advanced semiconductors. The Biden administration has said China is using high-end chips for military systems and AI for surveillance on the United States, and therefore these export controls are a national security priority. These changes have far-reaching consequences. Basically, ban on export of all semiconductors made with any U.S. equipment or by a U.S. citizen to China. This ban applies to all nations and companies using U.S. equipment. Non-compliance would restrict a company's access to U.S. technology, and those not cooperating will be put in the entity list or subject to sanctions requirement. Now, as a consequence, Apple has put on hold plans to use memory chips from Chinese YMTC. Apple wanted to use these chips as they are 20% cheaper than other players. Chinese semiconductor industry has reacted sharply, calling these restrictions arbitrary, and also said that these controls will put more stress on global supply chains. Chinese Semiconductor Association went on to say that the US government must reverse these wrongdoings, and the Indian industry, we've been getting reactions from them as well. They feel these US export controls have a sweeping impact, and the import of electronic sub-assemblies and modules from China will run into trouble in the short run. Supply chain disruptions related to RAM modules, component of modems, mobile phones and laptops could be affected. In the long run, though, there is a view coming from the Indian industry that the US export controls could help India with companies looking for alternate manufacturing bases.
Welcome back. Now, after Hero Electric, a second electric vehicle manufacturer, is facing charges of tax evasion, the Department of Revenue Intelligence has served a notice to Pune-based Tunwal Electric. Timsy Jaipuria is joining us with more details. Timsy.
Well, as you rightly said, that after Hero Electric, another company, another EV manufacturer has faced a serious allegation from the Department of Revenue Intelligence. And these allegations are pertaining to the fact that they were actually importing CKDs in the garb of auto parts, and thus not submitting the entire or the actual duty that was due on these imports. Government feels that about 100 crores of taxes have not been paid by this particular company. Just to give a brief about the company, Tunwal Electric is a Pune-based electric vehicle company headed by Jhumar Mal Tunwal. The company has not received any subsidies under the FAME, that is the FAME scheme given by the government to promote electric vehicle manufacturing in the country. FAME 2 is something that they haven't got any subsidies under. And when we reached out to the company, Tunwal Electric Vehicles have told us that taking cognizance of past few judgments, we are in touch with Commissionerate of Ahmedabad. We are now awaiting a final outcome of the review proceedings for further clarity. Also, I would like to tell my viewers here that what this company is exactly. Well, this company is a small EV manufacturer. They feel that however, there is a discrepancy in their data when it comes to the data that they have claimed themselves selling and what the government portal says. Well, the Vahan portal shows that they have registered only 37 electric vehicles that have been sold by these companies, whereas the company website says that it supplies 4,000 vehicles per month. So there's some sort of a mismatch also. The company has not come out clean when it comes to their data because the government data shows something different and what they claim is different. So let's see what finally happens, whether DRI is able to get these unpaid duties or not. Back to you.
Right, Timsy, thanks a lot for that update. Meanwhile, the Congress Electoral College votes to choose the first non-Gandhi chief in over 2 decades. Mallikarjun Kharge as well as Shashi Tharoor are vying for the top post. Now, the results of the elections are likely to be announced on October 19th. That's the coming Wednesday. Congress President Sonia Gandhi and Party General Secretary Priyanka Gandhi Vadra cast their votes today. Gandhi said she had been waiting for this for a long time. Meanwhile, Congress MP Rahul Gandhi also cast his vote for the next party president at the ongoing Bharat Jodo Yatra's campsite in Karnataka's Ballari. In international news, the Russia-Ukraine war is intensifying with Moscow firing missiles at the capital city Kyiv for the second time in 1 week. As per officials, Russia used kamikaze drones to strike the city. The missiles reportedly targeted Ukraine's energy infrastructure. CNBC-TV18 Sanjay Suri has been sending us ground reports from the war-hit Ukraine. Here's another report on how the country's IT sector, which amounted to 4% of the GDP, has also taken a toll. Take a look.
Ukraine was emerging as more than a match for India in IT before the invasion, and as with India, in outsourced solutions primarily. That took a huge hit with the invasion, and a few companies from India even found that to their advantage as work transferred away from Ukraine. Over recent months, business has begun to bounce back, but for it to stay that way, it will need the war to get no worse and to end.
We have and had like about 5,000 companies. IT takes about 4% of the Ukrainian GDP, and it generated, I think, about $7 billion in 2021. So that's like pretty good in comparison with many other industries.
The Russian invasion coming in February of this year seriously damaged much of Ukraine's IT business.
Everything changed. I don't think there is an industry which wasn't influenced by the war. And at the beginning of the war, there was this negative tendency. I assume many clients wanted to mitigate the risks, so they stopped investing in IT projects in Ukraine. We had this same situation in 2014 when the Russian invasion started. It also fell like something like 27% per year, but it quickly recovered in 2 or 3 years. So hopefully we are expecting the same situation.
Well, with that, it's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC TV 18. The news and updates continue right here on the other side.